Hello, guys. So, for the past 2 months, we've seen quite a bit of market correction and high volatility. So, the question is this time to turn away from stocks or is this time to invest more in them? So, I'm going to give a couple of examples where we've seen some good companies go through a market correction and come out stronger. So, let's dive in. First of all, stocks don't go on sale every day. These are rare instances, so we need to take advantage of such opportunities. Secondly, great businesses which have a good history of revenue growth and earnings growth usually come out stronger after facing a storm like this. We saw this during COVID. A lot of good companies came out stronger. And lastly, dollar cost averaging is your best strategy when going through a market correction. You want to wait for the dust to settle where market volatility goes down, and you want to start buying incrementally. You don't want to go all in because the market could fall further. As one of the greatest investors, Warren Buffett, said, he's not affected by market downturns. He actually sees this as a great opportunity to buy good businesses at a discount price. So now let's look at the two particular examples. So the first example I want to highlight is this company, cybersecurity company called CrowdStrike. Now, last year, CrowdStrike did a major software update in July of 2024, and this caused a lot of mayhem. A lot of systems went down. A lot of airlines, customers of theirs were affected by this software update. And this caused a major correction for their stock month. However, the company was still very solid. It just did not execute this major software update in the best possible way. And what did we see after that market correction? The stock actually came out stronger. The stock has actually recovered 64%, and it was trading at around 360 by the end of 2024. So this is a great example of an incident that happened that shook the market. However, the company came back stronger. The next example I want to talk about is the streaming giant Netflix. Now, obviously, Netflix saw a lot of growth during COVID, so their stock went up quite a bit. However, at the end of 2021, because Netflix had so much expectations for its growth, when it missed those expectations, its stock took a big correction. It went down 35% after its subscriber news was not up to expectations. So the stock actually continued to slide for a total duration of 6 months. So it went from $680 all the way down to $180, which was a 74% drop over these 6 months. However, the company still looked relatively strong in the streaming industry. And if you had bought Netflix at that bottom, you will see in the coming 2 to 3 years, it actually bounced back quite strong. It ended 2024 at a high of 880. So that was a gain of 389%, which is quite a lot. So, as you can see, these two examples highlight that if you stick with great companies and even buy more of them during downturns, you will come out stronger. So, thank you guys for listening, and I will see you in the next one.